I guarantee you with 100% certainty, if you implement the things that I am telling you in this video in your trading is going to be 100 times better. You're going to be more profitable. You're going to have less losers. You're going to have bigger winners. But you need to pay attention to the things that I am talking about in this video, and you need to follow them exactly how I say in your trading. So guys, there is one thing that so many people mess up or they don't pay attention to, and that is VIX. People do not look at the overall volatility in the markets, because certain days it is great to be buying at demand levels, certain days it is great to be shorting at supply levels, certain days you need to be scalping, certain days it is great to be swing trading and investing for the long term. But you need to know when those days are. In this video, I'm going to show you exactly how to know that. All right, guys. So right now I have the VIX on my screen, and you can see I broke this up into 3 levels. So there is the safe zone right here, there is the caution zone, and there is the danger zone. And just like a traffic light when we're driving, we have these 3 zones to tell us when we are good to go when it comes to investing, when it comes to swing trading or day trading. And we know that there is a high likelihood that our setups are going to work. That is when we are in the safe zone. The caution zone is when more fear starts coming into the markets, and we need to be more cautious about our trades. We need to know that the demand levels may be a little bit weaker. We need to expect some liquidity sweeps and some manipulation in markets. And when we are in a danger zone, we need to know that demand levels sometimes don't hold. We need to know that there is a lot of uncertainty and fear in the markets, and a lot of crazy moves. So we need to know what level we are at, what zone we are at before we take any trades, so we know what to expect. So the first one I want to talk about is the safe zone. So the safe zone, I made a little breakdown right here. We can see when we are in the safe zone, this is when VIX is between 12 and 17. This is when markets are calm. There's not a lot of volatility going on. There is smoother price action. Demand levels like to hold at this level, and this is where we can start seeing more trend days where markets just kind of grind to the upside. This is when it is safer to take those swing trades and the long positions work better. Demand zones hold better when we start seeing some demand levels like this, and we see markets break above those levels. We can expect that we will continue to trend a little bit higher. This is the perfect zone when it comes to trading the breakout and retest. This is the perfect level to be swing trading when you see a stock break above a supply level. This is the best level for our strategies. So this is the safe zone. And like I said, this is when markets are below 17. So when VIX is below 17, kind of around this area, this is when we can expect all of those perfect trades. When you look at the markets and you're like, wow, markets just kind of grinded up 1% and there wasn't much of a pullback, it is because we are in the safe zone, and overall traders feel confident. There isn't a lot of fear. People see the stock market as a great investment and a place to put their money. Now, the next zone is the caution zone. So the caution zone, as you guys can see, is when VIX is between 18 and 25. And this is the level where we need to start slowing down. Just like the traffic lights on the street, when the yellow light comes on and you start to slow down, this is kind of the same thing. We need to start to slow down in our trading and take a step back. And we need to know that volatility is rising, which means fear is rising, which means uncertainty is rising. So markets are a little bit nervous. This is when more reports start coming out and headlines start to move markets. This is when the speakers like Jerome Powell or Donald Trump or other feds start to speak and move the markets. This is a level where supply and demand zones still work, but we may not see those perfect retest of demand levels, we might see quick liquidity sweeps. So a liquidity sweep is something like this, where we see that demand level and we see the stock break above this level, and we are looking for that retest. But what happens? It breaks a little bit over that retest before it continues higher. This is what we call a liquidity grab. So we see a lot of liquidity grabs, we see a lot of manipulation around these areas, and we see a lot of choppy price action. And we start to see markets trade between zones. So we see markets bounce off those demand levels after grabbing some liquidity, and markets struggle to break above those supply levels. Sometimes we see those supply levels and we see markets attempt to break above those supply levels, and we see those fake breakouts, and then we see that move back to the downside. This is the area that brings a lot of frustration when it comes to traders, because it seems like things are not really working, or this is the level where things work after you exit the trade. So you try to buy at a demand level, you get stopped out, and then it goes in your direction. And that happens because VIX is in the caution zone. This is when you need to be selective with your trades. You need to have tighter stop losses, and you need to scale down a little bit. When you're in the safe zone, trade with your full position. When you're in the caution zone, you need to start maybe only trading with half your normal position, or maybe even less. So, like we said, the caution zone is when VIX is between 18 and 25, around this area right here. So next is the danger zone. So now for the past couple weeks, the stock market has been in the danger zone, and this is a red light zone. This is when you need to totally stop and think about if you even want to trade. This is the hardest place to read price action. This is when demand levels and supply levels sometimes don't even matter, because there is so much volatility and uncertainty in the stock market. We have seen markets go up 12% in a single day, and we have seen markets drop 10% in a single day because we were in the danger zone. Volatility is insane, and traders are insanely emotional in this level. So the danger zone is any level above 26. So when VIX is breaking above 26, just know we are now entering the danger zone. This is when panic and fear enter the markets and price action becomes absolutely unpredictable. Breakouts fail. There are so many fake outs. There's liquidity grabs. There's manipulation. This is a level where you do not want to be swing trading, and where investing in the markets is not smart. This is where you need to only focus on A+ setups, and even then know that it still may not work out. Our mindset should be more focused on shorts, because if you think about it, just say this is a supply level and markets come to this level, and it is a time where there is a lot of fear in the markets. People are selling. So you can expect a lot of flushes, especially when VIX starts to get really high. There's a lot of fake outs. So you see markets break above that supply level, and traders enter this area and they get stopped out. Or they get caught in that long position and markets dump on them. You need to avoid any type of breakout trade to the upside. Demand zones often fail before on the first touch. So if you have a demand level right here and you see markets trending towards that level, you rarely see markets consolidate and continue higher. Rather, you see it break below those demand levels before they go higher, and sometimes they even fail after that. And that is because we are in the danger zone, and traders don't see the stock market as the best place to invest their money, the best place to keep their money. So this is the danger zone. And the danger zone is when VIX is anywhere above 26. And we say anywhere above 26 because VIX can go as high as it wants. You can see in recent times, VIX went all the way up to 60. We've seen back in August, VIX went to 64. We've seen during COVID times, VIX go to 85, which is the highest of all time. So these levels, they bring a lot of opportunities because you can take small positions, especially with options trading, and make thousands of percent per trade. But you also need to know that if it goes against you, there is a strong chance that you will not even be able to become break even because of how much the stock moves in different directions. The spreads between our bid and ask is so wide because of all of that fear. There isn't Trades are not great. That's all I'm trying to say. So when we are in the danger zone, we need to be looking for quick scalps. We get in, we get out. We're not swing trading. We're not holding for a long time. We're not waiting for stocks to go from a demand level to the next supply level because most likely that will not happen. That is the danger zone. Finally, this is a bonus rule. You need to know that VIX isn't just a level, it's the direction. A rising VIX in the safe zone means that fear is starting to come into the markets. If you see VIX is dropping in the danger zone, just know that volatility is slowing down. We're still in the danger zone, but it's less dangerous. So if we look at VIX right now, we can see VIX was as high as 58, but we are starting to drop. So fear is starting to drop, which means those short sellers may not be as strong. Those supply levels may not be as strong as they were a couple days ago. Those demand levels are starting to get a little bit stronger, but they're still kind of weak. They're a little fragile, but they're starting to get a little bit stronger. So I'm going to show you guys a quick example of something that I would do when it comes to how I would trade when VIX is at a certain level. So right now I can see VIX is in the danger zone, but it is dropping in the danger zone. So it's dropping a lot. VIX was as high as 66 and now we are at 29 and we are starting to test. We are going towards the caution zone, and that big drop tells me buyers are starting to come in. So now we can see Meta. This is a stock that I took a position in yesterday, and I'm going to show you guys the type of trade that I took. So we can see there is a nice demand level, and we can see that we are dropping into that demand level. And what I did here is I took a long position once I seen that we were holding this demand level. But where did I sell? I'm not waiting for this full move all the way to the next supply, but I took profits around VWAP because I know when people buy at these levels, they're kind of scared and they're going to sell a little bit early. So I want to do the same thing. Quick scalps in and out. Just say this was a time where VIX was in the safe zone. In that type of day, what I would do is I'm buying at this demand level and I'm letting this thing run all the way up to supply because I know there is a high likelihood that it will, because buyers like the stock market at that time period, and they will probably keep buying until there is some resistance, and the resistance will come at the next levels of supply. If we were in the caution zone, I would be cautious. We start going a little bit higher and I'm taking profits as we are going higher, and I am watching my positions. I'm watching my stop losses. I either have automatic stop losses or I'm sitting in front of the markets and making sure I sell. So guys, that is all for this video. If you guys learned something, make sure you like this, send it to someone, and if you're not subscribed, make sure you subscribe, and I'll see you guys in the next one. Peace.